We're so glad you're back with us at Goldseek.com radio for another Gold Nugget segment. Today's special guest, hailing from all the way around the world in Singapore, Jim Rogers. Well, it's a pleasure to welcome back Jim Rogers, manager of Rogers International Commodities. How is Singapore today?
Oh, it's fine. It's great. The weather in Singapore is always hot or hot and rainy. Today it's hot and cloudy.
Very good. Well, you know, tensions in the Middle East continue to ratchet up in the showdown between Iran and the West, and you've gone on record noting that a military conflict with Iran could be, well, madness, and that the markets will suffer, except maybe precious metals. Could you outline why you think gold could be a safe haven here?
Well, when times of war, people flee to what they perceive as being a good thing. That doesn't mean it won't go down at first. Usually when war breaks out, nearly everything goes down. But sometimes things like oil, gold would go up. Even the U.S. dollar might go up as people panic.
The Bank of Japan, the Bank of England, the ECB, and the Bank of China, they've been loosening their monetary purse strings lately. Global central banks seem to be catching Ben Bernanke fever. And, you know, the symptoms seem to include a dovish stance on rates and monetary easing. You told the Economic Times recently that investments to own under such conditions include silver and natural resources. Could you please tell our silver aficionados why you like the rare metal, sir?
Well, I like all raw materials because when currencies are being debased, the refuge and the way to make money has always been in real assets. Silver is a real asset. I'm not sure I'd buy silver right now, but I own silver and I'm not selling it. I own all commodities. You know, if the world economy gets better, commodities will do well because there's shortages. If the world economy does not do well, then they're going to print even more money. When they print money, you got to own real assets.
You know, another market that investors may turn to is crude oil. A West Texas Intermediate crude recently flew past $100 a barrel. Can you see a scenario where oil revisits its former $147 record?
Well, there's not much doubt that it will sometime over the course of the next several years. The world is running out of known reserves of oil, whether we like it or not. The International Energy Agency is going around explaining to people that we're running out of known reserves. So oil would definitely go over 147 sometimes during the bull market. That doesn't mean it won't go to 80 in the meantime if something happens. Spain goes bankrupt, say, or some big surprise. But no, oil will certainly go over 150 again.
You know, in a Reuters interview, you noted that QE3 may not have been announced, but the monetization process is already underway, that the unadjusted M2 is going through the roof as the Fed buys up Treasury bonds. What's going on here, Jim?
Well, they're not just buying up Treasury bonds, they're buying up all sorts. I guess they're embarrassed to admit, I don't know why they're not doing it. You know, they announced QE1 and QE2. It didn't have much of an effect on the economy, had an effect on markets, but not the economy. So maybe they're embarrassed since they look so foolish twice and they know that there's huge criticism mounting over QE anything. So I just suspect they're trying to keep it quiet this time.
That's a good point. You know, they have been buying up the mortgage-backed securities, that toxic debt left over from the credit crisis. You know, over the past 2 months, the U.S. equities market has recorded its best performance in years. But in a Bloomberg TV interview last month, you told reporters that you don't own any U.S. stocks. Is this equity rally doomed to failure? And if so, why is that, Jim?
I'm playing in other ways. I mean, there's more than one way to be involved in the investment markets. I own shares in some other countries, and I own commodities and currency. So more than one way to play. I suspect that this year there's going to be more good news. After all, we've got an election coming in November, and they're printing and spending huge amounts of money to get reelected. So this year might not be such a bad year in the investment markets. 2013, 2014 will undoubtedly be a disaster, but we're going to continue to see good news this year because Obama wants to be reelected.
You know, it's been said that inflation is a very efficient method of confiscating wealth from society. And as the largest employer in our country, half of society is reliant on a government check in some form or another. Doesn't that arrangement create a moral hazard as the inflation reduces government expenses by billions of dollars per year?
Well, yes and no. Inflation has always been a disaster for the people who don't understand what's going on. You're right, it is a way to redistribute income, but the people who don't catch on usually get wiped out or suffer very, very badly. You're saying that government salaries will go down in real terms? Well, I don't think that's bad. myself. But if it's caused by inflation, that's not a good way to do it.
In a recent discussion on CNBC, you pointed out that the government is once again altering the way that it reports inflation.
Oh, yeah. If you go back and look at their way of reporting over the past three decades, they have changed their methodology several times. And they recently changed it again in order to lower the reported inflation. I mean, the government says, the BLS, the Bureau of Labor Statistics, says that there's no inflation in America. Nearly every country in the world acknowledges that they have inflation, except the U.S. Now, I'm hard-pressed to see how everybody else can have inflation and we don't. And I'm also hard-pressed to see how they can say we don't, because everybody goes shopping and we know the prices are up, whether it's education or entertainment or tolls or gasoline, food. I mean, we know the prices are up, except the government sits there and says they're not. They're lying.
You know, inflation is also a big problem for retirees and folks who rely on interest and dividend income for their very survival. You told CNBC recently that the Fed's zero interest rate policy is a disaster. It's destroying the entire class of savers and has negative implications for the future. Can you share some of the ramifications?
Well, as you know, interest rates are near zero, and the people who save and invest and don't go deep in the debt and do the right thing are getting wiped out because they're not getting any return on their investment, and they might even have to dip into principal. We're rewarding the people who went deep into debt and that caused the problem. The guys who came out with all these subprime loans and bought 4 or 5 houses with no income. We're trying to reward that class of people and destroying the savings class. This has never been good for an economy or a society. You wipe out the productive savers or investors, and what do you have left? I mean, everybody who's done this in history has gotten terrible, terrible consequences, and we will too. I mean, there are millions of people in America who are now suffering very badly for doing the right thing.
You regularly uncover market themes well in advance of the herd. What else is on your radar screen these days?
Myanmar is probably the best. Unfortunately, we're citizens of the land of the free, so it's illegal for us to invest in Myanmar. Everybody else is pouring in there, while those of us in the land of the free are prohibited from pouring in there. I guess the other thing would be agriculture. I'm still very optimistic about agriculture. As you probably know, farmers are now doing much better. Agricultural land prices are going up a lot. Agriculture is still high on my list of things for the future.
Well, sir, I want to thank you for your time today and wish you and the entire Rogers clan the very best.
Thank you very much. It's always my pleasure. Let's do it again sometime.